All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I got on, well, I was trying to jump on to make an Apple trade. I'm going to forego it here for a moment. It has jumped a little too much here for me. But let me show Apple here, and there are other stocks that are doing this out there in the market, and they still may be very buyable into the close today. Given where option pricing is, I'm just not going to chase it. And if you go look at the Apple options, the option pricing is, well, frankly, ridiculous, compared to what Apple normally is. But here's the hourly chart on Apple. And we can see the drop, right? Lower high, lower low, has been continual here with Apple. That hasn't gone away. Today, Apple had some kind of bad news with Qualcomm and whatnot. But take a look at this low right here, end of November, where the MACD was. And take a look at where the stock is, the new low, and where the MACD is. This is positive divergence. Where the stock makes a new low, the MACD doesn't. This is positive divergence. It tends to be a prelude to some substantial bounces. Okay, and we see that coming in, and now we have Apple moving above the 7-hour moving average, along with Apple. Let me throw the stochastics on here. Here's the slow stochastics. But you can see the stochastics moving up above 20. So we have all that happening right here, right now, for Apple. And again, I'm not going to chase it right here. If I pull up the minute chart, you can kind of see it. It made a jump here, 168 to 170. Yeah, about $2. From the time I start to jump on video, it jumped $2 here. And given where the options are, it is something where, the $6 for the at the money for next week, just insane. Here, 41 implied volatility on Apple, just wow. But anyway, when you have it happening with one stock in a market like this, you tend to have it happening to other stocks. We aren't seeing the same positive divergence in the SPY in the actual market itself. So it doesn't have that same positive divergence element. MACD is lower than where it was back here in November, and so is the SPY. So no real divergence, but we do have the stochastics pushing above 20. We have the market pushing above the 7-hour moving average. Those elements are coming into play. You take a look at something like a Microsoft, doesn't have the positive divergence on the MACD, but this is one that's bouncing off of a key retracement level rather than like the market or Apple that are hit new lows. Here we have a stock that didn't get quite sold off to the same degree, but still that same stochastics moving above 20 as the stock's moving above the 7-hour moving average. Here's Adobe, which sold off to an even lesser degree than did the market, than did Apple, and you can see the similar principles associated here, albeit Adobe started to push above the 7-hour earlier today. So we're seeing, this kind of similar action within tech, happening. I'm not a huge fan of the daily charts on these. The daily charts are, across the board from IBM to Adobe. They all kind of look the same and whatnot, but the hourly setups are actually pretty nice here. You see IBM doing the same thing. One of the things, if I wait to jump in, I do risk missing out here overall. That said, going through the option pricing, I'm not feeling too aggressive based on the option pricing. For example, if we go take a look at IBM. Right? If we go take a look at IBM, what do I need for my option to double? Right? Well, I basically need a $6 move for my option that expires in a week and a half to double. That means I need IBM to go to 126. Now, that's assuming no time decay. That's assuming no implied volatility loss. So really, I probably need a little bit higher. So rough math, for me to get a double on this, I needed to break above last week's highs. Could that happen? It for sure could. It sure could. But, chances are if it rallies up to 123, I'm going to be wanting to be gone, right? I'm not gonna want to really be staying in that. And so is there really a significant reward potential for the possible risk of waking up tomorrow and the market gapping down 40 points, which I think is a risk factor? For me, the reward doesn't justify the risk. So I have the signal. Am I going to have, is there going to be enough follow through to really justify it? And that is where I'm at. That is where I kind of look and I say, for most things, no. For most things, no. But, really interesting. You look in, and there's a lot of chatter about hedge funds. And, what's going on with hedge funds and, are hedge funds getting torched? And ultimately, yes, they are. Not all of them, but there are some hedge funds really getting taken to the cleaners. If you really want to know what hedge funds are doing, just take a look at the XLV. This sector has been a favorite of the hedge funds. And when we've seen the market get really fearful, the XLV has sold off and sold off aggressively. And this rebound back in the market has been led, yes, by tech, but XLV has come sharply off its lows. And this is the healthcare ETF. This is an area where you can make a very good argument that the fundamentals are unchanged. I mean, there's still, what does the economic environment have to do with healthcare, right? Now there is some effect, but ultimately, this looks like fund manager selling. This looks like fund manager fear, and we've seen the earnings, we've seen the numbers out of UNH and Aetna. This isn't the same thing as Apple in terms of the numbers, in terms of what's going on, and so we're seeing fund managers getting knocked out. Hedge funds getting knocked out of the Amgens, getting knocked out of the Aetnas of the world here. And if they are going to be, jumping back in, these are some of the stocks that they're going to be jumping back into. And, one where, still that same concept like we talked with FedEx. When's it bottom? Well, when it closes above the high from the prior day. And so far, that is not in play for the majority of these stocks. One of the stocks that's just held up phenomenally well through all of this is Johnson & Johnson, but it's not exactly one where it's consolidating, let's face it. So not too much of an opportunity right there. But anyway, there's some short-term hourly bull signals in a lot of different names out there. There are some exceptions. Things like Under Armour, there's not an hourly bull signal here. Right, I mean, we're still below the 7-hour. We're getting into slightly oversold, but stochastic still below 20, so nowhere close. Here's Nike. Here we see the stochastic starting to move above 20, but we're still below the 7-hour. And if we come in and put the MACD on here, do we have any divergences? Let me show it to you here. But you can see that, no, there's no real divergence here in the MACD. It's just kind of, hanging out overall. Airlines, they've gone green here this morning. Here you can see American Airlines popping above the 7-hour. Stochastics moving above 20. And, no positive divergence on the MACD. The MACD's just pretty much moved with the stock. So, for the most part, you see some bouncing areas coming in, but the divergences and the signals that I'm getting are coming into the Adobes, the Microsofts, the Apples of the world here. And let's face it, the options are pretty darn terrible there for them. I was just looking at Micron. I was curious if it had held. It's not holding. It's not pushing above 20. No positive divergence with Micron. at all. So yeah, it's one where I'm going to forego buying this these couple signals out there, just based on the option values, and we'll take a look at them again into the close, see where they sit, see if there's any sort of a little bit of value compression there. But anyway, we did see 20K volume come in this morning, and that's kind of marked the bottom here, and essentially the market pretty much just sitting where it opened up at last night, where S&P futures opened last night. I don't think we can look at today's market overall and say, oh well, it's more bullish going forward, or it has a big bull advantage going forward. But I also don't think we can say, hey, the bears have a greater advantage going forward from this. It is still one where the market internals are generally owned by the bears, and that's none of that is switching or changing here on the day, at least so far. Again, in these type of days, there's a lot of things that could happen. We're definitely getting multiple 35-point moves, here in the market today, and I don't think the market is done with all of its moves. So anyway, just wanted to show those signals coming in. Again, aggressive, could trade them. I'm not feeling that aggressive here with them. But anyway, Microsoft, Apple, Adobe, always some interesting price action. Thanks for hopping on. We'll talk to you later. Take care.